We've all heard the term FOMO, or fear of missing out, somewhere out in the sea of trading videos and chat rooms. But what is FOMO exactly? And more importantly, how does it manifest itself in each of us? We all begin trading usually by practicing all of the patterns that we've learned. It's important to get this practice with each of these patterns to determine what fits our personalities best. But somewhere along the line, it's important that we shed all of the plays that don't fit our personality. This allows us to become specialized and masters of these particular plays. This concept was not one that I completely grasped until actually pretty recently. The reason for this was FOMO. I was afraid that if I didn't keep my eye on all 10 stocks that were moving each day on the scanner, that I might miss out on the best plays. That is FOMO in a nutshell. It occurred to me recently that yes, I do nail a lot of great plays, and I'm usually in the stock that moves the most. But because I'm taking so many trades in other things that aren't moving as well, I'll usually end up giving back all of the profits from the good stock and the good plays in those trades. So I decided to make myself focus on one single stock and all of the good plays that it presented. Seems logical, doesn't it? But each of us has things that we can't quite see clearly unless we step back a ways and take a look at the bigger picture. FOMO can show up when we watch our guru or our chat room or even a friend or family member take a trade and start to win. We can be convinced to jump in just because somebody says they are. But unless we've done all of the work, planning where we're going to get in, where we're going to exit if it goes against us, and where we're going to take profit, and if we haven't looked at the daily chart and really figured out support or resistance, we really shouldn't be in that trade. It's okay to use your gurus and your chat rooms for alerts of things and sectors even that are moving in the market. But don't just jump in because somebody mentions it. You may miss some things sometimes, but usually you save yourself a lot more pain. Remind yourself that there is always another trade around the corner. FOMO can also surface when you witness a stock spiking 100, 200, or 300+%. It's going straight up and it looks like it's going to halt. That kind of move is hard not to covet, and you really want a piece of that action because it's not every day that you see it. After all, you spend like 90% of your time waiting around for your play to surface, and it's just kind of monotonous. Boredom creates FOMO in these instances. You have to tame that gold digger inside you and make yourself wait. The number of times a halt has opened and then tanked in the opposite direction is pretty large. Most people end up getting stuck in it because they were so excited to get in as soon as it opened that they didn't really think about the risk. This setup in particular is really risky, and I would suggest not trading it unless you are absolutely certain of your ability to cut losses quickly. FOMO can also come from being just a few more dollars from your daily goal. You start to see patterns where there aren't any. You know it's not an A+ or even an A- setup, but it could work out, and so you just take a try anyway. That is called overtrading. Stop yourself right there and remind yourself that you could end up giving all of your hard-earned gains back. Just be grateful that you have any gains. 90% of traders are losing. It's important to not look that gift horse in the mouth. Additionally, FOMO can surface when you've hit your daily goal and you just think, oh, I could just eke out a little bit more because things are still moving. Stop yourself right there again. You reached your goal, be grateful for it. Don't risk your hard-earned money. If you feel like you're really going to miss out on great momentum in the market on any particular day, you can reduce your size to about 1/3 of what you would usually use and continue to trade. But the moment that you have 2 or 3 losing trades, I'd suggest quitting. The best trades are often the first of the day. Similarly, if we've spent the day just sitting and watching the market and we haven't really gotten a chance to do any trading because there's nothing that has really set up, we'll often try to find something. And it's because we feel this sense of it being a waste of time to have gotten up for nothing. It is absolutely okay to sit on your hands for a day, trade the market, and don't force things. When we are getting ready to take a trade, FOMO can appear when the stock starts going in our favor a little prematurely. We often get worried that we'll miss it, and we jump in way too high off of our risk levels. The worst part is when it decides to go down to our originally desired entry level anyway. Because your risk level is higher now, you end up cutting and it ends up going in your favor the way that you originally hoped, and it just gets super frustrating. Entering at the bottom of a support level is always better because a clearer risk is available and you have less of it. This is a super hard habit to break, but it's probably the most important one to tackle. I've been working on it for all 4 years that I've been trading, and I've actually made the most headway in the last 6 months. It is amazing how much headache and how much money you can save just by cutting this habit out. Going hand in hand with this is a very important rule. Do not average down to save yourself. That game is a bottomless pit of pain, and the few times that it actually works in your favor, don't end up erasing all the ones that don't. I've made more headway recently because I understand support and resistance on a deeper level lately. Fear of missing out can happen when we're watching our stock come down to our exit level where we need to be cutting, and we just don't do it because we're afraid that it'll turn like a few cents below that. But hesitating to cut losses is one of the biggest reasons that stock traders fail. It's just not worth it to hold on. No matter what the loss is right now, it can get worse, and it absolutely will. Always cut your losses quickly so that you can stay in the game and trade another day. FOMO can arise in the moment that you take your third, fourth, or fifth try on a stock that has been stopping you out all morning. This is called revenge trading. Revenge trading happens when we just can't handle the idea that a stock is going to go in our favor. We know it, and we aren't participating. The worst part is we already took a bunch of losses and we just wanted to give our money back. Slow down and remind yourself that the more tries you attempt on a stock like this, the more likely you'll just compound your losses. If something is taking more than 2 to 3 tries to get, it's probably because it's not going to do it. If you have to, get up from your desk, do a little walk around your room or outside, and just remove yourself from the situation to reset your mind. Another way we find ourselves feeling FOMO is when we look at other traders that are successful. Seeing other people succeed can be motivating, but it can also be heartbreaking. You can start to create a cage of emotional pain when your brain is telling you, I started at the same time as them, why am I not successful? So then maybe the next day you go bigger in hopes that you can speed up the process, and you only lose bigger. Always check in with yourself emotionally and make sure that you're coming at trading in the right headspace. It's extremely important to create rules that help you fend off that fear of missing out in every way possible. The market is a fear and greed-based environment, and you're here to capitalize on the irrational movements caused by other people's fear and greed. But you need to do that with a level head. We don't want to be caught up in the avalanche of emotional turmoil that will end up getting us buried. After all, if you're prepared, there is nothing to fear.